Did you know that you can use the cash value that's built up in some insurance contracts to pay for college?
Welcome to this episode of Money Talk with John and Lorraine McCoy, your money team, registered representatives and investment advisory representatives with McCoy Wealth Advisors.
Welcome. In previous episodes, we've talked about 529s, UGMAs, UTMAs, and EASAs to help pay for college. Using the cash built up in an insurance contract is another option that you should consider.
And first, the primary purpose of an insurance policy is to provide a death benefit to designated beneficiaries upon the death of the insured.
It's a way to care financially for your loved ones after you've walked out on this life.
The cash accumulation in your insurance policy is considered a living benefit is secondary.
If you own what is known as a whole life, variable life, or universal life insurance contract, John and I are assuming that you purchased that product primarily for the death benefit. And we do not advocate that you cancel the contract or allow it to lapse.
Now, if there is a cash accumulation in your insurance contract, you may use it to fund college expenses. And there are three advantages for doing so. Number one, the withdrawals can be tax-free provided you do not allow the policy to lapse. Number two, you can use expenses for anything you wish.
Yeah, it's your money.
And number three, some insurance contracts allow you to borrow against the cash value.
Because if you have held that insurance contract for an extended period of time, insurance companies will often offer you loans at low interest rates. So, the key advantages to using cash value to pay for college are: one, the potential to withdraw funds tax-free, the ability to use those funds for any expense you wish, and three, the potential to borrow at a low interest rate. However, you want to be aware of three disadvantages.
First, a loan or withdrawal can reduce the death benefit or cash value. Number two, some insurance contracts limit the percentage of the cash value that you can withdraw against. And number three, if you overdraw the cash value, you may be subject to a taxable event.
Right, because the government can tax you on all or part of the money that you've withdrawn.
Does using the cash value accumulation in your insurance policy to pay for college fit into your financial plan? Where do you start? Let us help. We know the questions to ask.
And we welcome your questions. Contact us at McCoyWealthAdvisors.com. Thank you.
Thank you for watching this episode of Money Talk with John and Lorraine McCoy. For more information, visit their website at www.McCoyWealthAdvisors.com. Also browse the other shows found right here at Columbus Biz TV Shows.